Adobe is a stock that has had a fantastic track record. I mean, look at these annual charts, whether it's top line revenue growth, free cash flow, EBITDA, net income, earnings per share, their cash on their balance sheet, regardless of what you're looking at, a company like Adobe has been one that has done fantastic over this last decade or so. But going to their stock price, it is one that has been hit recently pretty hard. If we hop over to the research tab here on M1 Finance and we type in ticker symbol ADBE, Adobe stock has had a year of negative performance at negative 47%. And looking over the last 2 years, if you look at the 2-year chart, you can see that this company originally hit an all-time high of about $700 a share. So today you can buy it at $291 as of the time of me filming this. So what has happened to Adobe? Is this a company that is starting to falter? Is it a company that has its best days behind it? And what does it look like moving forward? We're going to answer that in today's video. We're going to talk about the new acquisition that they just made, their most recent earnings report, and all types of good stuff like that. So stay tuned. It's going to be a fun one. And if you haven't seen me before, my name is Jordan. I'm a millennial investor. And what I do is I showcase these portfolios in the dividend growth portfolio and growth portfolio using the brokerage M1 Finance. These are the holdings in those portfolio. There's 3 in the growth and then 20 in the dividend growth portfolio. So take a look at that. This is shared down below in the description. And if you want to get signed up with M1 Finance or other stuff down below, check it out and you can get up to $10 for getting signed up and you would help support me in the channel. So thank you so much for tuning in. Here's my annual performance and current balance as of the time of me filming. So thank you so much for tuning in. And without further ado, let's go ahead and get started with Adobe stock. Now, Adobe just recently got hit hard. Now, we talked about the share price. Let's load it back up here again. And we talked about how it's done over the past year or two, and it's been pretty bad. But the main pain has happened within the last week. And the last week, the company is down about 20% just in the last 5 trading days. That is pretty significant, especially for a company of this caliber. Its current market cap currently sits right at about $140 billion, as you can see right here. So to see a company move this size, that's pretty substantial. That's tens of billions of dollars. And what has caused that? Well, the main reason is because of the recent acquisition that they just announced, which this is a fantastic, fast-growing company by the name of Figma. And they are kind of like the new kid on the block for Adobe. This company is at a much smaller scale, currently having about 200 million in ARR, which is annual recurring revenue, and they currently are doing total about 400 million in revenue. Now, their net retention rates are fantastic. Right here, what I'm highlighting, retention of greater than 150%. If you don't know what that means customers that signed up last year, the year before, are generally spending 50% more this year than they did last year. So they are not only not losing many customers, they're gaining many at a very fast pace, but the old existing customers are spending more and more and more and more each and every year that they have it, and that's what's causing this company to grow so fast, and they have very adaptive tools like Adobe, except it's kind of a better version of that because, like I said, they're the newer kid on the block. Now, if you're not familiar with some of Adobe's products, here's an idea and just a quick glance at what they do. A lot of you know Adobe. Most of you use them. If you've ever worked in an office, if you ever have a computer or have ever done schoolwork or really anything to do with technology, at some point you've probably used Adobe at least once. Now, this company has many different products and many of them have been around for decades. There's only been somewhat of a real advancement in the company's creative cloud, and the main thing has happened through this acquisition and acquisitions like it, as it has bought out more products, competitors, and continued to just increase its software suite of products that gives it more of a competitive edge over its competitors. Now, Figma is one that has a very expensive price tag. This company is being bought out for $20 billion. Now think about what I just said for a second. I said earlier, going back to this slide, that they had 400 million in revenue expected this year, and they're being bought out for $20 billion with a B. They are paying 50 times, I'm gonna repeat that, 50 times the amount of revenue that this company is generating this year is what they're being bought out for. 400 million in revenue, 20 billion is the price tag they're paying, approximately half in cash and half in stock. And this leads us to why you see this weak performance when they announced this deal just a couple days ago. The reason why is that we go to their quarterly numbers here and we look at their most recent cash and debt statements, and you look at their debt first of all. Okay, half of this is going to be raised in debt more than likely, because if you look at their cash position, they do not have 10 billion on the balance sheet. They only have 5.7, and they can't take that to zero. So more more than likely, the vast majority of the half of it, the 10 billion, is going to be raised through debt. So this debt number that you see right here at about 3.5 billion is probably going to be somewhere around 10 billion total by the time we get to next quarter. Furthermore, if you look at their shares outstanding, they've done a very good job of buying back shares, but this 469 million shares outstanding is going to go up. Probably tens of millions of shares are going to be issued off the back of this deal, and so obviously your ownership in the company is decreasing because there's more shares outstanding, which is what Figma owners are now going to hold a part of from this deal. So it's getting paid at a very big price tag. The good news is that Figma has some of the most incredible names backing behind them, and their customer base is just fantastic. I'm just going to give you some bullet points of some of the names that they have, okay? We have a tech company, a storage and cloud company, Dropbox. We have a finance, international company named Stripe. I'm sure you're all familiar with it. Netflix, the largest streaming and entertainment business on the planet, uses Figma. We have Twitter, a social media company. Who knows? Maybe we'll get bought out by Elon Musk, but it is currently one that is using Figma every single day. Its employees are. Kimberly-Clark, one that is in the dividend growth portfolio, that sells paper products like toilet paper, paper towels, things we all take for granted, and Kimberly-Clark uses Figma every single day. What about Square? Square is another finance company, a new fintech company on the block that's growing massively, uses Figma every single day. Uber, I'm sure you're all familiar with Uber, the ride-sharing tech company, right? Zoom, I'm sure you're all familiar with Zoom as well. You're starting to see a pattern here. We all know these companies, and it has other names like Coinbase and Stitch Fix and Microsoft. So it doesn't matter if we're talking about crypto brokerages or clothing companies or data storage companies, or if we're talking about ride-sharing or just paper businesses. Across the board, many different huge industries use Figma, and not only are they using them, as we saw from those net retention rates, they're spending on average about 50% more each year on the product, and that is what is leading to this wide moat that this little bitty company is starting to dominate in. Now, this is really an opportunity for Adobe not to increase its revenue, not to increase its free cash flow or its net income. If they were just worried about these financial metrics and keeping up this beautiful quarterly revenue chart, there are better opportunities out there. The reason why Adobe is buying this is that if we look at the products that they have, many of these you know and recognize and have been out for decades. What they're really doing is cementing their moat. They're guaranteeing that if this company is successful as it has been in the last decade or so, they're cementing a guaranteed opportunity to be successful no matter what. Either one of the two will happen. Either Figma will lose all these customers that we just talked about, they'll stop acquiring new customers, and they'll fizzle out into bankruptcy and we'll never hear about them again. Okay, well in that case, people will continue to use Adobe, and this quarterly revenue chart will continue to look better and better as the quarters go on, as well as their profitability over time. Now, the other opportunity is if Figma is incredible and they continue to grow at these fantastic rates and continue to innovate and grow and thrive. In that case, well, guess who owns them? Now it's Adobe. In that case, it'll just help supplement this already fast-growing revenue, and any revenue that they lose on their old products, they'll just be gaining from their new Figma products. So it's a win-win for Adobe. So in the short term, if you're a short-term shareholder and you care about the shares outstanding going up, if you care about this debt pile going up a little bit, then this is not the deal for you. But if you're a long-term shareholder, if you realize that the pain has already started to get priced in, down 20% just off of the back of this deal, a lot of the pain and suffering from the shares outstanding and the debt being raised have already been priced in. So, not financial advice, do your own research, but in my opinion, I think if there was a time to be buying Adobe stock, it's not when this company is trading at $700 a share, but rather today when they just bought out another fantastic company and you can pick it up for literally less than half of that at $292 as the time I'm speaking. But other than that, guys, thank you so much for watching. Sign up down below if you haven't already. Check out all the stuff down below in the description. My name is Jordan. Thank you so much for watching, and I'll catch you guys next time.